Does property investing still work in Singapore with the tax hikes in the latest budget, with the latest round of cooling measures, increasing ABST to 17%? People can't help but wonder, should I still invest in property in Singapore? Will it still work? Will it still give us a profit when we buy, hold it for a few years and we sell? If you're wondering some of these questions, make sure you watch the end of this video where we'll cover answers to this and more. My name is Daniel and I'm the founder of Born Per Die Rich, and we create videos every single week to help you to grow passive income through property. Let's look at Singapore as a property market. First of all, obviously it's done really well. And a lot of us growing up, or we know of friends who have bought property and over the years it's gone up in value and they sold it and they've made a nice healthy profit. In fact, even my dad, he bought a HDB when I think it was $5,000 or $6,000. And obviously as Singapore was growing from third world to first, it has gained many, many times in value. And we know people in HDBs, in Pinnacle and Duxton or Dawson, buying properties in great location. And when the 5-year MOP is up, they can then cash in on a nice profit. Well, friends, if you haven't already known, with the prime location housing model, this phenomenon of millionaire HDB owners is just going to be less and less. Unfortunately, that's the way it is, right? Because the main purpose of the policy of HDB is for ownership, not so much for investment. And in the same light, Singapore is not going to grow from third world to first once again, right? So the kind of capital appreciation you saw in the last 10, 15, 20 years, precisely because of government intervention, cooling measures to prevent the market from overheating and then correcting and a lot of people getting hurt. By policy design, if more cooling measures are needed, the government will certainly put in more to prevent the market from going too fast. In fact, ideally, it should grow by 1 to 3% per year. So in that light, the writing is actually on the wall. Capital appreciation, yes, in the long run, Singapore, given the economy is stable, is land scarce, property prices are going to increase, but not at the same rate as before. And let's take a look at this news article over here where say 3.1 million profit in 3 years, in condo sub sales. And this was just in 2022. Stack homes are great, by the way. I think, they do really good research and articles on the Singapore property market. So I love the work that they do. I'm not commenting anything about their work. I think they're fantastic, but I'm commenting on the Singapore property market as a whole. So if you look at this, sub sale units, there are some gains, some losses, some districts have a lot of gains, which is fantastic. But how much are these gains and how many years did the property owners actually have to hold the property for to realize those gains? And I love it. They said here that the best gains, quantum gains, was actually in this place called Boulevard 88, right? 3.1 million gains. But look at the price, it's 12.5 million. I'm not sure how many would want to buy a 12.5 million or can afford to buy a 12.5 million to gain 3%. And if you analyze it, it's 11%, which is still respectable. But if you look at the other quantum gains, it's 4, 6, 5%, which is pretty expected of Singapore property market. However, these were the ones that were the best gains. So in reality, there are a lot of people, and I know of friends, I'm sure you do as well, comment in the chat below. For most people that who have bought property, in recent times, have they gained a lot in their value in property? Has it been pretty much stagnant? And if you watch this other video here, I interviewed a friend. He bought a property where there's going to be an MRT built. He held it for a good number of years, and the property value actually hasn't increased. The more important factor about property investing is this, and you really need to listen up and listen carefully. Beyond capital appreciation, which is going to be reduced, all right, or controlled moving ahead, where it's not going to rise at the same rate, it doesn't work for passive income, meaning the rents can hardly cover the mortgage. And in all these areas, all these properties we saw earlier in District 9 and 10, Martin Morden, and what's that, Boulevard 88, 12 million property, definitely the mortgage payments every month on these properties are not going to be able to cover the rent. So the person who bought it was actually making a loss every single month. Of course, unless these people are very wealthy, right? And they pump in the money and buy in cash. But at the same time, the question then is, what is the opportunity cost of that same monies that could be invested in somewhere else, making the same return or even higher returns? So for us investing from Singapore in UK properties, we can easily achieve 6 to 8% yields net of all expenses on our properties. And for more advanced strategies, between 10 to 15%. So if you haven't already signed up for one of our free web classes, make sure you do that. You can head to the link which is in the description below, and get yourselves educated and learn what are new ways you can get involved, make your money work harder without needing to buy a 12 million or 3 million condominium. In fact, people can get started with as little as 50 to 100,000 Singapore dollars and own the asset in your own name, right? It's not about buying together with others who you don't know. I think that's extremely risky. You shouldn't do that at all. Okay, so if this video has been helpful for you, please share it with somebody that needs to hear this. Smash the like button and make sure you get yourself subscribed to this channel as well. So this is Daniel signing out.